Well, I tell you, the Mag 7 is really pulling back, isn't it? Uh, I also got a Y Mag in there. Y Mag is getting destroyed. Look at that. Freaking horrible. Surprising how far down Amazon is currently. It actually got to a support or close to it. I have 187. I used to have the 200 as a buy area. Basically, the 200-day moving average around 217. But just looking at the chart, I decided, nah, I think it's going to get worse. I mean, with the AI spin basically hanging over their head and scaring people off a little bit, I felt like it was going to get worse. I didn't buy in. And I'm still not buying in because the chart didn't show any sign of reversal. But instead, I did something related to Amazon because I already own shares of a curve fund, AMZP, that does options on Amazon. And I had quite a few shares already, so I decided either I'm going to pick up shares or try to use a limit order and pick up a option contract, sell a put, a cash secured put on AMZP. And so that's what I did basically. I went in and let me show you what I'm talking about. I sold a cash secured put. I already had a cash secured put at 24 strike, which is underwater now because basically AMZP is around 22 something a share currently. So that one, that 24 strike is dying and being killed on that one. So I'm, not going to rebound unless Amazon rebounds on that one. I'll just end up with the shares at, I got over 2.5, I think, on the contract. So I'll end up at assignment basis of 2150 by July. But on this next one, I sold the July 17th, 2026 22 strike, and I received 200, well, 250 was the contract. Multiply that by 100 and then take the fee that Schwab basically charges me out, which is 66 cents, I guess. And I ended up with $249, not $9.34 out of that contract. So if I get a sign on this put at the top that you see for AMZP, my cost basis on those 100 shares will be under 20 bucks a share, almost what, 19 and a half almost, right? So I don't mind doing that. I mean, yeah, I'm missing out on the dividend because I'm not buying shares, but looking at the chart for Amazon, things could go lower even. So with that being considered, I'd rather sell cash secured puts to get a better cost basis if things go lower because I could continue to average down with selling puts, and I don't mind that. And if I'm never assigned, great. I get to keep the premiums. And 250 bucks, that's not too shabby to be perfectly honest. I'm going to keep doing it. Then I decided because I didn't have a position in KQQQ, also from Curve, I decided to pick up 25 shares earlier in the day. Then I decided to run it out to even 100. And naturally, right after I bought, the share price dropped even lower. So, but anyway, I got 100 shares of that one. I don't mind averaging down. Also, I was looking at a closed-end fund, FSCO is the ticker, FS Credit Opportunities, and it's been selling off lately. It ran up pretty good for the year, and it's a monthly payer. And I decided to take a dip on that, so I bought 50 shares of that. Then Trinity Capital is a business development company, and it's been pulling back lately. It's like 15 and a half bucks a share right now, I think. So I decided to take a gamble on a 15 strike put out to March 20 expiration. I received $37 on that minus the fee from Schwab. And HTGC, which I already owned 200 shares on, and I sold cover calls on it, luckily, when it was still around my cost basis, because HTGC has just been dumping. It dumped hard today because they're doing, I think, a share dilution, and also they missed slightly on earnings. They were just slightly off on earnings. And I think the guidance scared people, investors, a little bit too. So it's been dumping. It's under 16 bucks. I think it's around 15 and a half, which is a 52-week low, I think, is where it's hovering at for HTGC, which is normally a really great company. So I figured, well, I already own 200 shares. Let's see if I can pick up some premium. If I get a sign, I get a sign at like 14.55. So I sold the 15 strike put out to March 20th and received 45 bucks for that minus the Schwab fee. So that's what I did in regards to trading today, both options and picking up shares. And decided to get back on focusing on dividend opportunities. That's why I didn't pick up shares of Amazon, because I'm really wanting to pick up shares of Amazon. But I'm like, well, if it's just going to be dead weight for a while or even go lower, I think I'd rather do the options or buy things that are going to pay me income that normally behave really well. And most of these funds have done really well over their lifetime as far as total returns and performance. They're just recently pulling back relative to what the market and the underlying are currently doing within the stock market. So this is what I did today. These are my option trades and my shares that I picked up for the day. All right, guys, take care.